So I've been trading for 4 years and it feels like a very, very long time, but it doesn't feel like it's been forever. Like I feel like I have been evolving every single day that I have been trading. So maybe some beginner traders think that there's going to be a day where it just clicks. And there is a day where it clicks in terms of like you understand the model. But honestly, you're constantly developing day after day after day. Now, I'm obviously a much, much better trader now than I was a year in. Now I'm obviously max funded. I've traded private equity. I've done a lot of things in my trading career. I've also mentored over 100 funded students, and the list is growing, but I'm still better this year than I was last year. And last year I was also funded. So these accolades that make you money in the market, they are never the best level that you could possibly be as a trader. That comes with time. And it's a game of patience. It's a game that takes a long, long time. Now, it's interesting because this is a perfect time for me to talk about psychology in the market, because this week, I've taken no trades. I've taken no trades. It's Thursday. It's Thursday evening, actually. We're going into Friday. So Monday, no execution. Tuesday, no execution. Wednesday, no execution. Thursday, no execution. And honestly, my bias was right this whole week. But it did not come to the exact area or the area that I wanted to execute at. It did not come to the area that I wanted price to come to before I took my entry. So what I wanted price to deliver this week, it happened. But it didn't give me my entry requirement to enter, and that's why I didn't enter. And it's decisions like that might annoy you short term, but they keep you in the game long term. So the way I like to say this sometimes is me missing out on today's trade or yesterday's trade. They might annoy me short term, but because I have the ability to miss out on a trade because it didn't hit my checklist, that will also save me from taking hundreds of more losses when it actually doesn't fit my plan. So for example, if I took the trade today and yesterday, it didn't fit my exact plan. So would that creates inconsistencies in your trading when sometimes you do something and sometimes you do something else. It's the hard decisions that make you profitable. It's not the easy ones. This is hard. So I can't sit here and say to you that I didn't have a feeling this week like I wish I got into the trade and my bias was right. Of course I thought that. We all think that. You could be in the game for even longer than me and you still have that slight, because you get paid for your performance in this game, right? I could have executed today, but I would not have been following my plan. So I didn't make anything today. I didn't make anything yesterday. I didn't make anything in the markets this whole week. But last week I passed 2 accounts. And the week before that I made a payout. And the week before that I made a payout. So it's these short-term decisions, these decisions that multiply and multiply and multiply over time and time and time. And being able to make that hard choice on some days that sometimes it might frustrate you. These are the things that keep you in the game in the long run. So honestly, every day is a new battle in the market and you always have to keep level-headed. Now, I think all of this always comes back to your trading plan, and I will always give props to Mark Douglas. He didn't obviously teach anything technical. From what I know, everything that I've studied from him is strictly psychology in the market, and I learned a lot from him by watching his video, his lectures, and obviously reading his book. That was when things clicked for me, to be honest. Like, a trader has ego in the market, and the only way to be profitable, in my opinion, long term, is to completely get rid of that ego. That's why I say don't be so fixated if the market is going up or down, because you don't truly know exactly where the market's going. And people will always like to say that I know this, like my technicals show this, so the market should do this, the market should do that. But the longer you're in the game, it will humble you for longer and longer, and you'll realize that you are going to be more humble as time goes on, because you'll realize that you don't get everything right and you'll never get everything right. And the second that you enter a trade, you already accept it as a loss. So the thing is, now, before I get into my trade, I'm telling myself this is potentially a loss. And if it's good enough for me to accept that it's a loss before I get in, then it's a good enough trade. Because the problem is people think in wins. They think in that probability that this one's going to be a winner. They might even up the risk because this one looks like it's going to be a winner. This might be their only opportunity of the week, but this one looks like a winner. But a trader that's been through it, a trader that's had that pain, will never think of a trade as a winner before they engage in the market. They'll know that every single trade, as good as it looks, has the exact same potential and probability to be a loss. Now, of course, you're going to have a win rate. You might have a positive win rate, so you might take more wins than losses. But every trade still has that factor of being random, and you can never fully know if the trade is going to be profitable or unprofitable before you enter. So accept that. Accept it as a loss before you even engage in price. This is going to save you from that trigger, that emotion, that hurt, that pain, because you will never, 3 months down the line, remember a trade that you lost fair and square, and then the next day you took a win. You won't think of that, but you'll always remember the one that you upped your risk on and then lost an account. You'll remember that. So remember these short losses, these losses that you actually managed risk on, they don't define you. These things don't define you. And I always say, a lot of the students, that I've taught, they come to me and they say about, like, am I doing this wrong? Am I doing that wrong? And I always say, actually, the majority of you actually know how to trade. Learning the technicals is not difficult. Learning the technicals in trading is the easy part. The problem is, we have such a short-term and ungrateful memory. We could win 7 trades in a row and then lose 3 in a row, and you'll forget about the whole 7 that you won in a row. 7 in a row you could win. You could pass a whole funded phase 1 and phase 2 and then lose 2% on the live stage and think, like, I need to change the model now. Why do you need to change the model? It just worked for you. You literally just passed a phase, a whole funded challenge, by doing one model. So if it worked for you in that scenario, just because you took 2 losses, like, you have to let time play out. And honestly, the things that you hear when you're listening to trading psychology, these are things that you know. And when I was listening to trading psychology videos, I felt like I know this. I know I shouldn't be doing that. I know I should be doing that. I know I should be journaling. I know I should be limiting my losses, and but the problem is, in that moment when you're alone and it's just you in the chart, you make that short-term decision and you lose. Your head is not in the game. So one of the steps that I took in order to get to that next level with my psychology was hiring the time frame that I trade on, hiring the time frame of execution. And I did this for many reasons, but the first one is I find higher time frame to be the easiest time frame to actually predict. Is it easier to predict the next daily candle or the next minute candle? Now, of course, it's easier to predict the next daily candle. Doesn't mean it's going to be right every single time, but it's easier to predict the next full daily candle closure than the next 1 minute candle closure. And that's what traders sometimes don't think about. I always refer to this actually in a lot of my videos, but I seen on Twitter a long time ago, someone was clowning another trader and he said, "You always take the easy trades." And the guy replied and he was like, "Well, obviously." And it made me think, like, obviously we are here to take the easy trades. You're not here to prove something to anyone on Twitter, anyone on TikTok that, look, I took the hardest trade. I held this through the storm. It went from 1 hour all the way to 14 hour. It came back to 3 hour. I went back into drawdown and I held it through the storm and it went up to 20 risk to reward. That's not why you're here. That's not why you're in the market. You're not here to do these Olympic stunts on the chart. You're here to consistently be profitable. So make that easy choice. Do the easy thing. And that's for me. People ask why I take constantly 1 to 2, 2.5 hours. The reason is because that's easier for someone to replicate in a long-term basis. I'm not planning to be, a one-hit payout wonder where I've made a 60k payout. You've probably seen I don't make 60% payouts, etc. I'm trying to be in this game for the long run. So I'm just doing 2%, 3%, maybe 3.5, 2%, 1%, 2%, 3%, maybe 4%. But I'm not trying to hit these big figures. I'm in the game for the long run. So I make these decisions that I think helps me long term. And remember, everyone's different. If you feel like you can withstand, taking 7 losses in a row and you're on a low risk to reward, system, then that's on you. But I find it keeps me in the market. It keeps me going in the long run. Because when you're in a low risk to reward system, although you might not make 7% in one trade, you're most likely and mathematically probably going to go on a shorter losing streak than someone that trades high risk to reward, because it's easier to hit your target. And that's simple as to get to 1 to 2 is obviously easier than getting to 1 to 7. So I might take a loss, and then I take a win. And that's good. I think constantly understanding that you can get out of that drawdown cycle makes it a lot easier to fathom these losses, because it's not the end of the world. And another thing is, traders, they don't let the whole cycle play out before they change something. So they say that I'm going to trade this system, I'm going to do it long term. But many of them, they have never traded a system for even 20 live trades before changing something. People don't have that patience anymore. They say, I'm going to trade 1% risk, I'll take 10 trades. And if I take all 10 trades, I might blow my funded account, right? But most people, by the time they might get 6% in drawdown, they've already changed the strategy, they've changed the risk profile, they might even change the time frame, because they think that it's obviously not working if I'm in drawdown. But I say these drawdown periods are part of your system. It can happen. And most likely for most people, if your system is profitable and you go on a losing streak, if you actually truly did the exact same thing that you'd been doing before, you probably would actually come out profitable. I think 99% of people fail in trading just because of these flaws, not because the technicals are hard. It's not hard to learn these concepts, not from myself, but from anyone online. I can show you all the concepts. Someone else can show you all the concepts, but that doesn't make someone a good trader. It makes someone a good trader to be able to accept these losses, hold out on a system for a long-term basis, accept losses before you get in the market, and truly accept that the market will always be right and you'll be right sometimes. Ego is what destroys most traders in the market. Lower your ego. Maybe you might have to lower your risk to reward. Maybe you might take, 2 losses in a row. But the problem is when that third setup comes and you say, this is the one that's going to take me out. Why was that one any different from the first two? The market was random in all 3 scenarios. But since you upped your risk and now you've lost this one, that's the end. You went from, let me take 10 trades, 1% risk. If I lose all 10, I blow my funded. You went from that to taking 3 trades and blowing the funded because you put so much importance on one trade idea. One trade idea is not going to change your life. Hundreds and thousands will change your life over a long period of time. But the moral of the video is that you get better each day. And really, a trader, I don't think, will ever get to that next point where he can even do any of these things and make these hard decisions without going through that pain. So if that's you and you've went through that pain and you understand how it feels, then today is that day where you just make the hard decision. If that hard decision is, I need to lower my risk to reward. If that hard decision is, I'm not going to trade this certain day of the week. If that hard decision is, I'm going to higher the time frame that I trade on to give myself less opportunity, because a real trader understands every trade is risk exposed on the market. I want to be in the market as least as possible, not as like the most I can possibly get in the week. Because every time I enter a position, that's my risk on the line. That's my capital on the line. So it has to be the best scenario. A business owner is not going to buy any random stock to fill the walls. They're going to buy the stock that has the highest potential of actually selling, that has the highest potential of actually being marketed, making a big profit. But traders, they roll out of bed at 10 a.m., 2 hours after London Open. They don't have a daily bias. They don't have a structure. They take a loss and they wonder why things aren't working for them. You don't take this professionally. You don't take this seriously. And you can't make the hard decision. 99% of traders also fail because there's no barrier. You don't have to. People are gamifying this. They make it like a video game. You know, if I take more entries, I know all this because I used to be that guy. I've been trading for a long time. I've done everything. I've done all of these different time frames. I've done all the little different strategies. But people gamify it. They make it like a game. Like, if I can take this many trades in a day, then I'm going to get to this. And I'm going to scalp this lowest time frame that I possibly can because they want that dopamine boost, like a video game. This is not a video game. The more trades that you get in the market is the more risk exposed. You have to have the best opportunities to even think about executing. So we go back to the start of the video where I say, this is a week where my trade bias was completely right. I wanted Euro USD to sell off on the week and it completely melted the full week. But it didn't come to the area that I wanted to execute and I didn't execute. And that's the progress that I made, in the last few years, because I know the same version of me, even 3 years ago, I would definitely have tried to chase that trade. I would definitely have done something stupid. So that progression will come. Just try to make that hard decision.